YouTube people? How's it going out there? To be brief, in today's class, in today's session, we will be reviewing some concepts and I will be giving you some rules in order to how to validate the last fractal and how to validate your operative range. With this, you may be able to get with the high probability zones for you to be able to enter to the market for you to be able to have good risk reward trades. So just let's then speak less and let's go for the chart. Let me then open very quickly right in here. And perfect, people. So just let's then review the rules and then we will be reviewing some examples in the market. So let's then go so high for all the information to fit. Now, as I was telling you, we will be just reviewing our last fractal and our operative range validation. So in order for us to do so, in order for us to validate the last fractal, we will be needing to follow some rules. And it's pretty much simple. I'm going to give them to you very quickly right in here. So rule number 0, and this is for me the most important structural thing, and it's that we need to determine our order flow. With this, we will be just confirm. I think that if you're here, you already know how to do this. So just let's then briefly explain it. So you will be looking for a sequence of higher high points followed by higher low points, and this may construct a bullish structure. And if you find a lower low points followed by lower high points, you will be in a bearish structure, in a bearish order flow. Perfect. Let's then make this little smaller. Ooh, that was too much. So allow me 1 second. And perfect. Now, rule number 1 is that we will be needing to look for the previous structural point. This means, let's make the example for a bullish structure. So a bullish structure may be something like this. Yeah, something like this. So, as we are in a bullish structure, we will be looking for the previous structural points. This means, in this case, since this is bullish, we will be looking for the previous higher high. This means this point, right? Now, just let's make the example for a bearish structure. That would be something like this. And in this case, since we need to look for the previous structural point, we will be looking for this lower low, right? That's pretty much clear. So, I mean, the higher high or the lower low. Perfect. Now, rule number 2 may be to look for the candle body structural break. I mean, we will be seeing that when an order flow is created, for the order flow to keep its structure, we will be seeing some structural breaks. And this structural break will be only valid if it's made with a candle body. So this structural point may create an structural break with a candle body right in here. If it breaks in a candle wick, it might not be valid. It may be valid if it breaks with a candle body. In this case, this may be our structural break. In this case, this might be our structural break with candle body. Perfect. Let's then go for rule number 2. In rule number 3 may be to ask yourself, where did the price came from to create the structural break? Where did the price came from to create the structural break? So This structural break was created by a previous point. So where did the price came from? It came from this point in this case. And in this case, the structural break was made here, so the price came from here to create this break. Perfect. And this is also the point that maintains the structure, the order flow. So in this case, if we are in a bullish structure, we will be seeing our higher low right in here. And this might be our lower high. Perfect. Now, let's then go to rule number 4. So, oh my God. Rule number 4, it might be also to ask yourself something. And in this case, it might be to ask yourself, where did the price went to? I mean, and this means to identify the new structural point. In this case, where did the price went to? I mean, when it was created the break, where did the price went to? I mean, the new structural point, the new higher high. And in this case, where did the price went to when the break was made? So it went to this new point, this new lower low. Perfect. And now that we have already researched for those 4 things, we may be having the last rule, and it might be this last fractal and operative range validation. In this case, our new fractal may be composed by the prices between this new higher high and this previous higher low. And for this case, our operative range, our last fractal, may be composed between the price as our lower high, this new lower high, and this new lower low. Perfect. Now, that's just more than it. I mean, with this, we now have like a new perspective of the fractality in the charts. And with this, we may be able to identify the high probability zones. So I will be making some notes right here, maybe. Yeah, I have them. So it might be like, if for the price every time will fluctuate in our operative range. This means it be moving in this operative range. And if this move in our operative range, we may preview that it will keep its order flow. The same in this case. If the price fluctuates in this zone, in those prices in our operative range, we may preview that it may keeps its order flow. Perfect. And something that will also give us like a preview that the price will keep its order flow. It's that the pulse time, I mean, the movement that is positive to the order flow, it's the pulse. So in this case, this is the pulse. And in this case, this is the pulse. And we may be seeing that the pulse time, it's lower than the pullback time. This is the pullback, right? I mean, most of you already know that. So yeah, we will be seeing that the pulse time, it's lower than the pullback time. Perfect. And now let's then continue. With those rules, we now have a fractal. However, in this case, and this is like pretty much personal, we will be having like some I don't know how to call it, like some probability characters confirmations, like some structural confirmations of this fractal that will give us like the zones, like the high probability zones. So just let's then get to those nodes for this to maybe easy for us. Perfect. So as I was just telling you, we will be having some probability characters confirmations, and we may also have some rules for this. So let's then review those rules. So the first one is that we may see, okay, so that every fractal have two zones. Let's then draw it as we did. So I think we may be able to draw this like this. So we come here, and let's say this is our fractal right here. This is our operative range. So what we will see is that every fractal have two specific zones. Let's say the price is here. And let's say that this was not that fast. Let's then make it again. Right here, and right here, and right here, and right here, and right here. So we will be seeing that we will be having this fractal. I mean, let's say we have already applied our rules, so we have identified the previous structural point and where did the price went to, that it has created the break, that where did the break come from, went to, I mean, and perfect. We will be seeing that we have two zones in this. So we will be having premium zones that are constituted by expensive prices, and we use them to sell. And we will be also having discount zones that may be constituted by cheap prices, and we use them to entry as a buy in the market. Let's then have it here. Perfect. So how we identify them? We use the Fibonacci regression, and it's the 0.5 level. It means the 50% of your fractal. So what we will see is that if you use the Fibonacci, the half of the fractal may divide it in two zones. These expensive prices, we may call that the highest part of the fractal may be our expensive prices. So we might be able to find here our premium zone. And right here, we will be finding like cheap prices. So we will be calling this our discount zone. Perfect. Let's then review like character confirmation rule number 2. We will be seeing that most probable the fractal may have two entry zones. We will be seeing a decisional and an original point of interest. We call it like that, like points of interest. And we will be finding a decisional and an original. So the original might be this one. Just let me then draw it. Our original point of interest will be the creation of the fractal. And most of the times we will be able to see that this movement is not direct, that it might create like this fake pullback, and this might be our decisional point of interest. Now, uh, where we will be finding them? If we are buying, I mean, if we are like in a bullish order flow and we want to buy, we will be finding it in our discount zone, and if we are selling, we will be finding our point of interest in our premium zone. Now, let's see then rule number 3, and this might consist in observe the chart in the moment you want to trade, I mean in session, but it might be to observe that your fractal have inner liquidity. This means, like, saying in other words, like it it has to be difficult for the price to get to the zone. This means if this is our interest zone, like this one and like this one, if those ones are our interest zones, it might be difficult for the price to get to there. So we may be able to see something like this. So it comes here and creates this structure and continues and then creates a structure here again. These levels, these equal lows, are inner liquidity levels. And we will see that then it will hunt that liquidity and it maybe get to our decisional point of interest, and then it might react again, and it has to be difficult for the price to get to the zone, and then it comes here and then it continues with the order flow. Perfect. And now we have a last rule running here, and it's that we will be needing to identify like something that we call neutralization. Let's put it running here. Sorry, let me get it. So we will be needing to identify the neutralization. The neutralization is that the last candle wick hunts the liquidity from the previous candles. This means that the candle that creates the movement cleans the previous candle's liquidity. If we are buying, we will be looking for it in the lower point. If we are selling, we are looking for it in the higher point. And we will be just seeing that neutralization in this case, like right here. Just let me know. We will be looking for that neutralization right here in the deepest candle, and we will be looking for something like that. So we will have like a candle right in here, another one right in here, and another one right in here. Let's see those 3 candles. Let's put their candle wicks, like right here, right here, right here, and right here. And then we see this and this. So this, let's say that this is the last candle previous to the movement creation. So we are seeing something like deeply in here, like through, through, and we are seeing the extreme point. Those are the candles that we see there. And the neutralization, it's basically this candle wick that takes this and this liquidity levels. So this candle wick came here just to take the liquidity here and then take the money that is like stuck here to create the new movement. And that's basically it. That's the neutralization. You may be able to see it as I told you. Just keep in mind this. If you're selling, you will be seeing it in the higher point. If you're buying, you will be seeing that in the lower point, as we see in the example. And now, with this, we got a high probability fractal. Let's then put it right here. And now we got a high probability fractal. Perfect. And that's pretty much it, guys. I mean, I will be just giving an example on how to apply the first rules, and your homework it's to practice with the rules and to get to the probability characters rules also. So then let's make a brief example right here. And also just keep in mind, if you want to see this deeply, you can also DM me, and I'd be more than glad to just go ahead and take advantage for you to have a one-by-one mentorship, and this might be like explained in live with me anytime you need. And just DM me if you want to just go deep on this educational trading strategy. Perfect. So let's then have an example. So let's go and briefly review our rules. So the first thing is that we need to determine our order flow, right? So let's then, in this case, you and me know that we are in a bullish structure, so we will be determining higher low, higher highs, followed by a higher low, followed by a higher high, followed by a higher low. So we may be able to just identify that we are in a bullish structure. Don't see this. So now let's then apply the rules. Look for the previous structural point. In this case, this might be this structural point. Then look for the candle body structural break. I mean, this structural point may need to break the structure in a candle body as it did right in here. And then we may needing to ask for ourselves, where did the price came to create the structural break? It came from our higher low. And then ask to yourself, where did the price went to? So we need to identify the new structural point, I mean this one, and this may be our higher high. And then we will be having our last fractal and our operative range. In this case, and the order flow was not followed, and we may be able to see that here we saw a change of character, but no worries, that happens. It was our operative range. It was not the high probability zone right here was not respected, so it continued making a structure, and so it changed. Now we have here a new lower low point because it may be lower than the previous one. So we may see that we have right here a lower low point. In the same case, so we will be seeing that this lower low, the order flow changed. However, it's the same thing. So let's then get it. So that lower low was followed by a lower high, then was followed by a lower low. So we had a bearish structure, so the same rules. Now that we have determined our order flow, we need to look for the previous structural point. In this case, this means this one. And then we need to look for the candle body structural break. If we at this point made a candle body structural break, it did, as it did right here. Where did the price came from to create the structural break? It came from the lower high. So basically this point. Now, where did the price went to? So identifying the new structural point, and then the operative range and the fractal validation. And as we see in this case, the structure was respected, and we have exactly our original point of interest right in here. And it was completely respected by the price. So as we see, it reacted. And it had inner liquidity, and then it reacted in our premium zone. And that's your homework, guys. So I hope that this may be useful for you. Those are the rules. With this, you will not be lost in the market again. You will not be lost in the charts again. And that's it, guys. I hope you to have a great rest of your day and take care. We'll see you in the next trading session. Bye bye.